The banking industry faces significant challenges despite improving profitability and shareholder returns through interest rate increases. CEOs and boards grapple with dismal valuations, growth concerns, and the struggle to adapt to intense regulations. Shareholder value destruction and uncertainties in consumer behavior amid market disruptions further complicate the landscape. In this video, we will explore the results of the Alvarez and Marsal Leadership Report. The video begins with a concise overview of the 2024 Banking Themes Report, then analyzes the impact on the internal audit profession and finally elaborates on the role internal auditors play in the banking sector and how the setup in banks is different from other non-regulated industries. The report concedes that the banking sector continues to struggle to adapt to intense regulations, and transformation programs are yet to deliver their promised outcomes and advantages. As economies continue to rebalance, corporations and consumers are reprioritizing investments and spending in an environment of higher borrowing costs. Market disruption is compounded by continued consumer behavior changes centered around how and why they shop, what products they demand, and how they engage with businesses across digital and physical channels. In an environment of uncertainty, we believe that the drive for profitability will separate winners and losers and that boards will take action. Governance matters above all, and boards are accountable to ensure that executive management decision-making and transformation programs deliver results. We offer 5 key themes for bank CEOs and boards to set a clear leadership agenda, make profitable growth decisions, and redirect the course of action. In response, the report proposes 5 key themes for bank CEOs and boards to navigate this challenging environment. First, there are M&A activities. The report anticipates an increase in M&A activity with a focus on inorganic profitable growth, consolidation in the middle market, and niche transactions. Second, there is regulatory optimization. The report suggests accelerating balance sheet optimization to improve capital efficiency and transition from rule adherence to gaining a strategic advantage as regulatory requirements increase. Thirdly, there is digital transformation. Experts emphasize the urgency of delivering tangible results in digitalization, calling for changes in operating expenses, timely product simplification, and providing a unified customer experience across channels. Fourthly, there is revenue growth. The report addresses the plateauing of rate increases, focusing on actions to drive revenue growth through organic means, particularly through net interest income. And finally, operational resilience plays an important role. Experts highlight the significance of managing digital and cyber risks while rationalizing technology costs and enhancing operational capabilities in the face of the biggest risk. The overarching goal is to set a clear leadership agenda, make profitable growth decisions, and redirect the course of action amid the uncertainties and challenges faced by the banking industry. The results of the 2024 Banking Theme Report suggests the following impact on the internal audit profession. First, there is increased regulatory scrutiny. With a focus on regulatory optimization, internal auditors may face heightened scrutiny to ensure banks adhere to evolving regulations. This could result in increased demands for compliance checks, risk assessments, and reporting accuracy. Second, there is digital transformation challenges. The emphasis on digital transformation may require internal auditors to adapt their audit processes to assess the effectiveness and security of digital initiatives. This could include evaluating cyber risks, ensuring data integrity, and verifying the implementation of new technologies. Third, M&A due diligence is important. As M&A activity is expected to increase, internal auditors may play a crucial role in conducting due diligence on potential acquisitions. This could involve assessing financial risks, evaluating the compatibility of systems and processes, and ensuring a smooth integration from an internal control perspective. Fourthly, Operational resilience assurance needs to be taken into account. Given the highlighted importance of managing digital and cyber risks, internal auditors may need to enhance their focus on evaluating the operational resilience of banks. This could involve assessing the robustness of cybersecurity measures, testing incident response plans, and ensuring the continuity of critical operations. Finally, strategic alignment is key in facing challenges in 2024. Internal auditors may need to align their audit strategies with the broader strategic goals outlined in the report. This includes understanding and auditing the effectiveness of initiatives related to revenue growth, digital transformation, and operational resilience. Internal auditing in the banking world is a specialized function that plays a critical role in ensuring the effectiveness of risk management, internal controls, and governance processes within financial institutions. Several aspects make internal audit in the banking industry unique. First of all, most banks are regulated institutions. This means that they are subject to supervision by a national financial regulator. Therefore, regulatory compliance plays an important role. Internal auditors in banks are responsible for ensuring that the institution complies with a multitude of financial regulations, such as anti-money laundering, Basel III, Dodd-Frank, and more. They must stay abreast of regulatory changes and assess the bank's adherence to these regulations. This implies that internal audit interacts not only with the external auditor, but also the financial regulator. This three-tier relationship is often referred to as the regulatory triangle. Take a look at the triangle and see how it is included in the next slide. This triangle relationship is also embedded in the 4 lines of defense model for financial institutions to put the emphasis on the coordination between external parties, e.g. regulatory supervisors and external auditors, and internal auditors. The 4th line of defense, on the right-hand side, represents the regulatory supervisors and external auditors and has been added to the 3 lines of defense model. The 3rd line of defense is represented by internal audit. There is an active exchange of information flow between internal, external audit and the financial regulators. Not only do bank supervisors benefit from the result of the internal auditing work, but they also turn to external auditors for certain additional tasks or for the collection of supplementary information when this contributes to their supervisory work. At the same time, moreover, external auditors could also benefit from a relationship with supervisors. In carrying out their duties, they could obtain access to information that would help them in discharging their responsibilities more effectively. This would lead to a triangular relationship between internal auditors, banking supervisors, and external auditors. If you are interested in the 4 lines of defense model and its application, please check our website www.cpetrainer.com, where you can immediately enroll in on-demand courses about this topic. Another aspect that is specific to the banking industry is the importance of risk management. Banks are exposed to various risks, including credit risk, market risk, operational risk, and cybersecurity risk. Internal auditors focus on evaluating the effectiveness of risk management processes to identify, assess, monitor, and control these risks. They also assess the adequacy of provisions for potential credit losses. Fraud prevention also scores very high when it comes to risk profiles of banks. Internal auditors in banks play a crucial role in preventing and detecting fraudulent activities. They assess the adequacy of controls in place to mitigate the risk of fraud, including internal controls over financial reporting and transaction monitoring systems. And finally, financial controls are important in banks. Ensuring the accuracy and reliability of financial reporting is paramount in the banking industry. Internal auditors review financial controls, assess the integrity of financial information, and ensure compliance with accounting standards. This includes auditing loan portfolios, investment portfolios, and other financial instruments. In the challenging landscape of the banking industry marked by low valuations and sluggish growth trajectories, the role of internal audit emerges as a linchpin for mitigating risks, ensuring governance effectiveness, and safeguarding against regulatory scrutiny. Internal auditors play a pivotal role in identifying, assessing, and managing risks inherent in banking operations, including credit, market, operational, and compliance risks. Their scrutiny extends to governance structures, providing independent assessments of the roles and responsibilities of boards and senior management to align practices with industry standards. Moreover, internal audit functions act as a bulwark against compliance breaches by meticulously verifying adherence to stringent regulatory frameworks, ensuring that banks operate within the bounds of laws such as Basel III and anti-money laundering regulations.